having been an analyst for many, many years for some of the biggest natural resource banks that were operating in the space, I was excited the first time I saw this deposit. No, we've got something very substantial. It's low cost, it's high quality ounces, and it's getting bigger. I'm not saying we're going to get anywhere near that. I wouldn't expect it, but multiples of 5 to 10 times would be an early stage target if we continue to see flows into the gold sector. And I say again, people who've been in the sector for a long time will be aware of the large multiples you can get in our space due to the highly rich reoffer.
The Kibali gold mine is one of the most successful gold mines in Africa and one of the best assets from Barrick Gold, one of the largest gold producers in the world. And actually, AXINO has been involved in Moto Gold Mines, which was the company who first discovered the today's Kibali mine deposit. So we are quite familiar with the Congo, with Africa, and especially this area of the DRC. And today with me is a really interesting story. Today with me is John Barker. He is the CEO of Loncor Gold, a company that has also a couple of millions of ounces of gold in the Congo, pretty close to Kibali. So it's going to be exciting. John, first of all, thank you very much for your time and thanks for being here.
Jan, it's a pleasure and a pleasure talking to you.
Great. So before we dive in really deep and talk about all the details and numbers here, let's start a little bit with a general overview. If I would ask you on the street, what is Loncor Gold about? What would you say? What is your pitch, basically?
Yeah, well, over the last 4 years, we've developed a very significant gold deposit. And as you mentioned, it's in proximity to Africa's largest gold mine situated in the Congo. And so it's in a mining jurisdiction, a proven quality mining jurisdiction. And our deposit shows some similarities to that big mine. But we're not just big, but we're also some of the highest quality resources that you'll find. It's measured in grams per ton of gold. So we already found something extremely significant, and now due to an asset sale recently, we're starting to drill a fully funded drilling program to get even bigger, which will take us to the tier 1 category, the largest deposits out there. So we're really moving aggressively. And I know many groups claim those sort of parameters in it, but I think the thing that really differentiates us is that because we've mainly grown during COVID, we're not that well known, and we're still getting our story out there. And that's reflected in our valuation, both based on a fundamental study that was done a couple of years ago, which puts a value currently around $1.9 billion in our assets. We valued at 40 million. So a huge disjoint. And also versus our peer group, look at our market cap versus our resources. You get an enterprise value per resource. We're around 7 times cheaper than obvious comparables in West and East Africa. So yeah, that's us in a nutshell.
I was about to say that's a really great pitch, and I think that's summarizing the story really good. But let's talk about the asset sale that you already mentioned in your pitch. If I have a look on your website, you're talking about roughly 5.5 million of ounces in the ground. But in your presentation, it says you have a little bit less. This is because you already said you're going to sell part of the asset, which is a quite unique situation. I mean, we're still talking about a development company, but you're selling parts of the asset. Why are you selling it? How much of your ounces are you selling? And what are you selling it for?
We had a secondary asset around 40 kilometers from our primary asset, the Gumby, the one that really holds all the excitement in the short term. And it was 1.1 million ounces. We weren't going to be developing it for a while. Markets were tough. We had been back to the market on numerous occasions raising cash. So shareholders were being asked to come up with more and more cash in difficult market circumstances that everyone knows about over the last few years. So we thought of a way to try and be creative. And we knew we were not going to be developing the secondary deposit called Macapala. So we looked for a buyer of this 1.1 million ounce resource, and we found a group and the deal was signed in December. And as you say, 10 million, or just over 13 million Canadian. We're getting it in tranches, and that allows us now to go ahead and start drilling underneath our main project, Dumby, without having to go back to shareholders. And our aim is to be drilling our first drill holes in the area within the next 1 to 2 weeks.
All right, that's good to know. So you sold 1.1 million ounces for 30 million Canadian, and you still have more than 4 million ounces in the ground on your main project. And I think this means something, and this should show us like the potential. And at the other side, we can talk about this if you like, also the potential downside risks here, because when you can sell 1.1 million for more than 30 million Canadian, you still have more than 4 million ounces in the ground. The company is valued at I think it's 40 million Canadian dollars. So what is the downside potential here?
Well, we believe there's very little downside potential. And I know, again, management, that's the thing that management says. But having been an analyst for many, many years for some of the biggest natural resource banks that were operating in the space, I was excited the first time I saw this deposit, especially at Dumby. It sits there, it's a hill, relatively straightforward to mine the first few years. We already have a mining permit approved, so some of your viewers may be aware in many jurisdictions, it's very slow to get a mining permit. I looked at a chart just today where in North America it can take up to 24 years from discovering a project to actually mining it. Well, if you look to the right-hand side of that same chart, you have the Congo, which has 14 years. It's the second quickest area to get into mining, and something that Robert Friedland has proved with his Kamoa-Kakula in the south copper deposit. He's gone ahead, built a world-class deposit, usually ahead of schedule and in a remarkable time frame. So that's not the risk. It's not that's not the risk there at all. And having Kibali as our nearest neighbor means that we have the drillers, the engineers, the banks, the whatever it may be, is sitting in the town of Kibali. So we believe that we're completely undervalued, and there is very little reason for it versus our West and East African partners. And it's just a matter of getting out there and telling the story, which is what we're doing now.
That's great. And let's talk about the project a little bit more. I mean, you're close to Barrick Gold, and I think that could lead to imaginations. Also, you have Resolute Mining on your share register. They own 20% of the company. They are also active in Africa. So there are some of the major players having a look at you. Also, Newmont Mining is a part of the share registry. So let's talk about the economics here, because all the large companies and all the large investors also are looking for great economics, world-class projects. What do you have to offer in part of economics?
I touched on in the opening that we did what's called preliminary economic assessment. And we did that at the end of 2021. December 2021. And that was based on our resources at the time. And we put in there a major, significant open pit to take out all of our resources. And looking at that, it gave us all-in costs, which would be bottom quartile in the current world. So low costs, as you'd, and because we have such a high grade of deposit, high quality deposit, so we have low costs. We also have the potential of hydro there. We've already outlined schemes, which is why Kibali is so profitable. It's got cheap electricity. So we've done a lot of work. But the long and the short of it is if we extrapolate now to current gold metal prices, I said earlier on, $1.9 billion after tax based on a 5% NPV. $1.9 billion after tax. We have 85% of the project. The government's already got its 10%. So we have a mining permit, and so the government gets 10%. So we have 85% of that, and our current valuation is 40 mil. So it is a very significant project, and will only get more significant, we hope, as we drill underneath. If we push through 5 million ounces, gives a lot of flexibility in our project. We can start playing around with perhaps looking at a smaller pit and going underground earlier, if that works for payback and IRRs and things like that. But that's something for the future. The first thing now is we know we've got something very substantial. It's low cost, it's high quality ounces, and it's getting bigger. So yeah, we're on the radar screen of many players. And for the last year or so, we've spoken to a number of them, but because of the way the market is, most of them are looking for low ball offers, which we've never shown to shareholders. But a lot of corporates out there know exactly what we're doing.
That's good to know, and it's quite usual in the mining industry that the big guys are really taking risk and making investments when the market is already on the upper move, right? The most of the mining companies are not contrarian, so most of the retailers are on the other hand, and I think at the moment the markets are pretty weak, and in overall speaking, an opportunity for people that are interested in the mining industry. But let's also talk a little bit about you as the CEO and the management team, because the management holds 20% of the company. That means something. But let's give us a little bit of the background. Why do you think you guys are the right persons in the right seats?
But we've had a team on the ground for almost 3 decades in the Congo. Our chairman, Arnold Condrad, has operated in the Congo for almost 3 decades. Peter Cowley, who is our president and really heads up the geological elements. He's also operated in the area, both the Congo and Tanzania, which is the same sort of geology, it's just split by the Rift Valley. And he's found over 30 million ounces at a number of world-class mines and very similar geology. So we have somebody who knows their way intimately around the type of geological structures, and somebody who knows their way intimately around the country and how to operate within the country. And then, of course, people on the ground as well, who have been with the company for, again, some of them way over 20 years. So we have a team in place to operate in where we are. It's important to say that from a corporate perspective, we're now in a much stronger position to discuss with corporates. For many years, we had very little money, and with that, you have very little negotiating power. Now we have the money coming in from Acapella. If a group sits across the table and makes us a lowball offer, we don't have to think so seriously about it, because we say, this is what we're doing over the next 6 to 12 months. We're looking to crank up the drilling, crank up the resource ounces, and get more and more noticed by the market, and hopefully see value released in the company. So we're in a much stronger position from a negotiating point of view with strategics.
So, John, let's talk a little bit more about the upcoming drill program and the news flow out of it. Are you really looking forward to do an aggressive drill program? Do you want to increase your ounces? Do you want to increase the grades? What is your goal, and what can investors expect here?
Yes, the whole point of the drilling at below Adumbi is to work out what the underground potential is below our major deposit, and hopefully push the ounces through 5 million ounces, as I mentioned earlier on. So we will be drilling. As I said, our aim is to have the drillers on in the next 1 to 2 weeks. So that's the first thing, is to get more information, and then potentially down the line, rerun the economic models with a smaller pit and an underground scenario, which is very typical for many mines with a similar structured deposit to ours. So that's where we're going. And in the short term, the news flow will likely be from a second area, or hopefully we believe it'll come from the second area, and it's called Imbo East. And that's about 8 to 12 kilometers away from Adumbi. We've been a lot of early stage exploration work. Some of the geology looks very similar to Adumbi, and some of it looks very similar to the project we sold, Macapella. We're going to put some shallow holes, 1 to 200 meters below there, with 1 drill. So that will probably come through with news much sooner than Adumbi. So Adumbi, we're drilling down to 600 to 900 meters, and we would expect information in September, if everything goes to plan. But we may get information sooner from the likes of Imbo East if we hit something. If we drill below Imbo East, we don't see anything, then there'll be no news. But we believe that they're very interesting targets that we're putting the holes into. So we have 2 drill rigs at Adumbe, 1 at Imbo, 11,000 meters at Adumbe. And as I say, there'll be progressive news flow towards throughout the rest of this year from initially Imbo East, followed by Adumbe.
Great. Sounds perfect, and it sounds like you have the potential to build a whole district over there in the DRC in the Congo. So let's summarize the whole story here, because I think it's a pretty simple story to tell, right? You are funded, you have the cash because you sold part of the asset. You also have a couple of million ounces in the ground. You're close to Kibali, one of Africa's most successful gold mine, which is operated by Barrick Gold, the second largest gold producer in the world. You have an experienced management team, and you also have shown that you are able to generate success. You also have skin in the game, meaning the management owns 20% of the company. You have some very good economics, and you made your study by a gold price from like 1,840. Now we are way above that, and we all expect probably the gold price to go even higher. So sounds like we have some exciting times ahead, John. Is there anything else we should mention in the end to the German audience here?
I think you summarized it well, Jan. And I just look forward to getting people in early on this story. I think just to remind the people who have been through in the market for a while, there are really now signs that the gold equities are taking off. If you look at the major gold shares, they're trading close to 52-week highs. And we believe that it's just a matter of time before some of that cash moves down into the more leverage plays. And as a developer, which we are, we believe we've got significant leverage from this point onwards. Seeing we're currently valued at around $10 per ounce resource, with a profit margin currently of about $1,500 an ounce. I'm not saying we're going to get anywhere near that. I wouldn't expect it, but multiples of 5 to 10 times would be an early stage target if we continue to see flows into the gold sector. And I say again, people who've been in the sector for a long time will be aware of the large multiples you can get in our space due to the high leverage we offer.
Absolutely. John, thank you very much for telling your story today, for sharing the excitement in the Congo, exciting project here. And I'm really looking forward to a news flow, and let's talk again soon.
Thank you, Dan.